Morning all. How are we all doing? Morning Stevie, morning Ladder, morning Cam. Right, sorry. Morning Peter. Good afternoon even. Good afternoon, good morning, good evening, wherever you are in the world. Right. Let's have a quick look at the news for this week to start off with. So we know what we've got coming up. We've had some news this morning, well, actually last night. New Zealand dollar retail sales. Huge miss on that for retail. So New Zealand dollar obviously has had a little bit of a tumble. Not dramatic. Morning Seymour, morning It's Time. So yeah, a little bit of a tumble on the New Zealand dollar. It's come down bigger on some pairs than it has on others, but overall, obviously on its way down. So potentially there's some opportunities for bounces today on these. We might get an ADR hit on these New Zealand pairs. So looking at obviously support resistance areas that we've just broken, potentially for bounces short. But yeah, we'll see on those. But yeah, not great news for the New Zealand dollar overnight. It's quite a big miss, that 0.6, negative 0.6 on a plus 0.2. So that's nearly 1% they've missed by, which is fairly big for retail. But retail is not a main leading indicator. Retail is an after effect of all monetary policy. So it's not a leading indicator. It's what we call a reactionary indicator. So it's something that is affected by monetary policy. So it doesn't directly influence monetary policy for the central banks. Morning, Dev. Morning, Diamond. Morning, Big Papa. So yeah, so that's all with today. There's not a great deal of news today. It's all orange, but there is news, but it's all orange. So we'll see if we get any impact, but unlikely. So got Broadbent speaking this morning. Wouldn't expect a great deal out of that unless he says anything particularly impactful. Core durable goods this afternoon and pending home sales for the US dollar. So that's an hour pre-market and half an hour after market this afternoon. The big one is the Bank of Japan tomorrow morning. They've actually put a time on it at 4:10, which is unusual. Normally that's tentative, so it comes out at some point in the morning. But that's going to be the big one. So this is Ueda's first real speech since taking over the governor-designate position for the Bank of Japan. He will be the new governor going forward. So it'll be interesting what he says. When you get a new governor coming in, there's not really an awful lot different they can do because they've got a toolbox of things they can do with monetary policy. But it's like prime ministers and presidents. When you get a new one coming in, they have different opinions and they do have an impact on what happens. So we may find that there's a rallying speech and it's like, yay, the end's going to go mental. And all of a sudden we get some pumps or dumps, but you never know. So that'd be interesting to see what comes out of that. And obviously we'll be able to see what is said in the Financial Juice feed. There's some actually in there this morning, look. So yeah, that's the main impacted news tomorrow morning. Then we've got GDP for the CAD tomorrow afternoon. That's a fairly big one, obviously. Consumer confidence, which isn't amazing for the US dollar. The main news for this week is the CPI figures for the Australian dollar and their GDP, which comes out on Wednesday morning. Then we've got Bailey speaking, and then we've got the PMIs for the US dollar. So Wednesday is the big day. We have got obviously a fairly big day of news on Tuesday as well, but Wednesday is really the pivotal point for the week. So we might find that we get some decent midweek reversals this week. Where the hell's that gone? Sorry, I just lost my pen. As price basically just pushes or pulls this week, and then we get a reversal based on the news that comes out midweek. We've got the CPI estimates for the euro. The only way they will affect the market is if they come out dramatically different to expected. So obviously the inflation figures, if we get an estimate of it coming down dramatically, we may well have some weakness come through on the euro, because if that comes down dramatically, obviously, then it's going to put less pressure on interest rate rises for the euro, which can be detrimental. Then we've got Orr speaking in the evening, that tentative will be like late at night because it's New Zealand. Unemployment claims for the US as well. And then Friday, we've got the PMIs for the US dollar for services. So fairly even spread for news this week. We've got bits and pieces coming out all week. So let's just refresh my feed. So just whizzing through this morning to see if there was any massive news over the weekend. Couldn't see anything really of any interest. So going back to Friday, more rate hikes, Collins is saying. So it's looking more and more likely that the US is going to go to a 5.5 terminal rate on their interest rates. So the interest rates we had forecast for the US dollar was sitting somewhere in the region of 5.25, 5 to 5.25 was the sort of rates we were looking at, and we're on 4.75, but it looks more and more likely that they're going to go for a 4.75. A 5.5. So that's a 0.75 increase, which will probably be released in 3.25s or maybe 1.25 and 1.5, but we'll see. But yeah, so I think that's more likely that is going to happen now. Just because the unemployment figures, those unemployment figures that we had coming out of the last announcement, we weren't expecting that to go down. As you increase interest rates, unemployment tends to change, i.e. go up. And as you can see, the US is the only currency that's got a negative. So everybody's been increasing interest rates. They're the only ones that have actually had a negative impact on unemployment, which is very, very, very positive, which is why we've seen the rally in the US. Market opens in 2 minutes on the DAX. So we just quick update on the COT report. We have had an update on COT. So the new figures are updated on the website, but these are only from the 31st of January. So we are still miles behind. The CFTC released another announcement on the 24th saying that they have updated to the last report, which was the 3rd of February, which gives you the 27th, 29th. God, what is it? 29th, I think it is. Better get it right. '31st, sorry. Yeah, get it right. 31st. I thought that's a bit far away if it's the 3rd. So we've got the 31st of January figures now for COT. So we're still way behind, but they're more updated than the previous time. Okay. So it's still going to be a couple of weeks before we get up to date on this. So COT, you've really got to take with a little bit of a pinch of salt at the moment. So when you're looking at combined sentiment, this is updated. You can see we've got a lot more +4s in here now. And -4s. So there has been a change, but we still don't know how accurate this data is. So difficult to take it into account, but up to you, really, with the COT data at the moment. So it's either way, you can see it's swinging really hard or really, really hard in a buy or really hard in a sell. Yeah. So worst case scenario, I think we got 65%, isn't it? 60, sorry, there. So the pound, 60% short. So we are fully short the pound. Aussie dollar, fully short the Aussie, fully short the CAD, fully short the Swiss, long Euro, long New Zealand, long US. Long gold as well, but that's, yeah. So yeah, so just take those into account. Right, so that's the news done. Markets open, 8 o'clock. So we are open on the DAX. Morning, Sagar. Morning, ladder. That rocket. What rocket? Where have you seen a rocket? Confused.com. Can't see any rockets anywhere. Someone fired one. Oh, that rocket. Yeah, so DAX is off. Well done if you took the pre-market. Woohoo! If you took the pre-market, there's your risk. Jesus. Okay. There's your risk, 15 pips. You are sitting 46. Well done. Looks like you were frozen for a second. Yeah, I was frozen. I'm finding it's. I keep saying, I've said this a few times in the live room. When I switch brokers, what tends to happen, and I don't know why this phenomenon happens, but when I switch brokers, they're absolutely fine for a while. And then suddenly things start to go wrong every now and again. And then you get to a point where it starts to go wrong regularly. Yeah. And I'm finding this. The reason I switched from Axie was because Axie's spreads were getting a little bit wider and their data connection was getting a little bit worse. So I switched over to Forex. Absolutely fine. Had no problems with them. Over the last month, I would say, maybe 6 weeks or so, I'm getting a lot more freezes like you just witnessed there on Forex. Never used to have it before. And, you know, I rescan the servers and stuff and it tends to fix it. And then it's fine for a couple of days and then all of a sudden, bang. But it tends to happen at the open, which is exactly when you don't want it to happen because what you're getting is a massive dump of tip data, obviously. So when you have a news event, the same thing happens. When you have a news event, a lot of people find that their platforms lock up. And the reason it's locked up is because the dump of data, you're going from like trading 500 to 1,000 contracts a minute to trading 100,000 contracts a second. Yeah. So the platform just can't handle it, basically. I'm finding this creeping in now with Forex, so it might be time for me to start looking around for another broker again. I might switch back to Axie because they keep emailing me saying, "You come back." I'm missing my money, missing my commissions. Anybody take the pre-market open? Anybody still in it? For pre-market. Blimey, look at that. Oh, that's a lovely profit. So there's your pre-market running. This set file actually hasn't been doing particularly well over the last couple of weeks, over the last week. But this is going to pay for it, basically, I think, today. Ooh, look at that. So just banked just banked 3,800. Very nice. I'll take that. So there you go. So there's your pre-market. So here's your 5-minute opening range. Good luck with the 5, 10, 15 today. What's going on with the DAX? I don't know. It's just a big spike. Yeah, out of your 2 TPs and still on it. Very nice. Dev, yes, you're in it. Good. Going like mad. Man on drugs in a marathon. Like a madman on drugs in a marathon. I've not heard that one before. Waiting for a reversal. Out of 1.26%. Very nice. Okay, so this is your 5, 10, 15 set file playing out here. So there's 5-minute opening range. I must adjust this. It hasn't got an offset for some unknown reason. 5, 10, 15 is there. Must change this to have an offset. Oh, that's a 15, sorry. That one. Oh, God, where's the offset, everyone? Where's the offset in my product, everyone? There. 15. Just going to adjust the set file. Don't know why I missed that, but I missed it. Okay, so this is your 5-minute opening range. So having a look at DAX today, where we're potentially going. Obviously, we had the big drop on Friday. So we put in a 346 pip move. ADR is 195 on the DAX. So, you know, not far off of 200 ADR to the downside. So we're obviously this morning looking to pull back. So this is the first large propulsion gap. that was performed that happened before, in between basically the London and the New York session. So we're just tapping back into that at the moment. So if this is a legitimate bear move, we'll be finding some sellers starting to kick in around about this level potentially. So if you stick a fib on this, you'd be looking at somewhere in the region of 50% retracement on the move, which is quite often where we start market structure pullbacks to the downside. So where we are at the moment, I'm not sure we're going to get a particularly vicious move like we had on Friday today. I'd be surprised if we put in 2 big down days on the trot, but you never know. So looking at the daily, we had this opening, we had this control candle that has been holding price for the last 2 weeks plus. Friday, we cracked it. So we broke out the lows on that on Friday. So when you look at what happens when you have a sort of a control candle or a range in place, when you get a breakout, it tends to be usually a wick rather than a break and a hold. If you do get a break and a hold, in that case there it was very, very tiny and it immediately pulled back inside. So today will be very interesting to see whether or not we're going to do that. This I would class as being the new control candle now. So this is what I would look at forming a new range. If we don't break out today down this way, I will go back to using that as basically the range and say this is just a false breakout in the way that that was a false breakout there. And we'll look to bounce around inside of here this week. But that was a pretty significant down day on Friday. If you look at the other indices as well, they all put in a very, very nice bearish engulfing, lower high, lower low, good market structure to the downside. But they are all pulling back, apart from the Dow, they are all pulling back in a potential uptrend. So, you know, there's a lot of people calling this now the new bull market. I think it's a little bit early personally for this to be calling this a bull market. We haven't broken out substantially, and we made a new lower low last time. So it's difficult to tell what the hell this is doing. At the moment, we're kind of in an ascending wedge, which is bullish. However, we still haven't broken structure to the upside. So it's a bit of a confusing market structure, a bit of confusing technical at the minute on all of these. But it is looking a little bit more bullish. However, with the US dollar rallying the way it's rallying at the moment, I don't think we are going to get a bull market. I think we've got more bear ahead of us. So we'll see what happens. But if we get a breakout to the upside today, especially after a move of that size, we might well struggle to make any headway, because it means we're going to have to put, if this is going to be a higher high and a higher high and a higher low, we're going to have to put a massive move in, aren't we? A 200 ADR bull move to the upside. Tricky. So we'll see. Stranger things have happened. But just gone long on the DAX for the 5, 10, 15 strategy. So this is actually the 5 and the 10 minute opening range, because that was an inside bar. And this is the 15-minute candle. So we'll see what happens on this one. But pre-market, that was the move for today. So, however, obviously, if this keeps going, all better. Right, ADRs today, nothing to look at. Obviously, it's a new week, so there's nothing on the weeklies. Now, the monthlies, we are at the end of the month. Obviously, tomorrow's the last day of the month. It's 28 days in September, isn't it? I'm useless with Friday. In February even. Sorry, I'm still on my drugs for my arm. So we've got 28 days this month. So tomorrow is the last day of the month. At the end of the month, we tend to get a sell-off or a big push. So this actually might be a legitimate move. It might be the end of month move getting underway as the market participants try to balance their books. So ADRs, nothing today. Weeklies, obviously, first day. So we've got these monthlies here, which we can potentially have a look at. So the first one is Aussie dollar CAD. That obviously has dropped dramatically to the downside. So from the beginning of the month there, we are, hitting our monthly. But all of these are really just about hitting their monthlies. So none of these are really extended on the month, which is what I'd like to see. So just hitting your monthly range at the end of the month it's not really unusual, is it, if you think about it? So this normally does 385 pips in a month. It's done 406 pips this month. So pretty much what its average is. So it's still fairly normal, but as we get extended like this, obviously you usually find you'll be extended on the 4-hour RSI. So these are good mean reversion opportunities in the fact that we should be looking for some kind of pullback into resistance. So we've broken this support, we should turn into resistance and look for a drop to the downside. So mean reversion, good chance for that one to push to the upside. Aussie is weak at the minute. And Canadian dollar is being dragged along with the US strength. So it is a mean reversion against what could become a nice downtrend. So this double top held very, very nicely. So yeah, I would be looking potentially for a pullback on this. So nice little ADR, nice little H4 RSI extension play. So drop down onto M15, which you've just had a reverse alert and get in on the reverse alert there. So we're now pulling back for that potential W reversal. So you got Aussie CAD, Aussie dollar, US dollar as well. I'd be a little wary about Aussie US. All of these are going to be extended. Everything against the US dollar is going to be extended because we've had nothing but good news on the US dollar. So obviously this is pumping really hard. Again, another reason why you would expect the indices to be coming down. Strong US dollar is negative index. So, but however, we've got a very, 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 very strong push on the US. It is exhausted. So there is a high probability of getting some kind of bounce back, but I wouldn't expect to go too far. So be looking at 4-hourly potential resistance areas, which you got here, and this accumulation in here, which is that low there. So these areas basically is where I'd be looking for bounce backs to. Yeah, somewhere in that zone for potential shorts. So if you want to play counter trend on this, you've just had the reverse alert on M15. It's extended on the 4-hour. So there's your H4 M15 entry, playing it back up into that area there, which is ADR today. So push back up into ADR. You've got two propulsion areas there, potentially, that might act as sellers. So yeah, nice mean reversion opportunity, but don't get greedy with it. You are counter trend. But it is very extended on the monthly. It's done its monthly range. Euro US dollar is exactly the same. Yeah, so 4-hour RSI is extended. We are entering into a potential support area here. So we've got that low there. So this area, roundabout, sort of on its way to ADR today, basically. Potentially could act as a bounce point. We could just accumulate here and have a little pop. So again, dropping down to M15. You've just had the reversal alert. We're just coming up to the Asian highs. A little bit trickier to find a target on this one. You've got a lot of resistance coming up. Yeah. So when we get sort of up to here, you're not at ADR and you're running into a lot of potential levels where we've just had support break, support break, support break. You know, US is very, very strong. So if it is going to have a breather, it's very difficult to tell whether it's going to be just a small pullback on a continuation or whether we're going to get a nice, decent pullback on the move. If we're going to get a decent pullback on the move, 1, 2, 3, 4, 5 days down from here. So you'd be looking, yeah, I mean, that wick would be sort of between the 38.50 area. So maybe somewhere up into this accumulation on the hourly. But tricky one, this. So your counter trend, whatever you're doing against the, if you're trading against the US dollar, you're against strength. So up to you. It is a counter trend mean reversion. New Zealand dollar yen and US dollar yen. So we've had decent moves on the yen. New Zealand dollar is massively weak at the moment. I say massively weak. It's just weak at the moment. New Zealand dollar yen, is that extended on the monthly? It's 10th of February. 385. I was sorry, that's New Zealand. I was going to say New Zealand dollar yen. It's New Zealand dollar US dollar. It's not extended. New Zealand dollar US dollar. There we go. Yeah, basically 4-hour RSI is extended. It's pulling back. You've kind of missed the entry on this one already. It's gone. So it is starting its pullback now. Really like this up into this area here. So we've got really nice propulsion. So this is a textbook WRB or propulsion gap. Yeah, so we push down. DAX is just hovering at the highs at both of the 5 minute at the moment. So we pulled down, bounced, came down, had a kind of second attempt at that around that level, went into an accumulation, and then broke it. So that's the propulsion gap that broke the low, but also broke that support. So that is a really good, strong institutional sell there. They just smashed straight through both of those levels and didn't look back. So when we get back into there, everybody that started that break is going to pile in potentially again. So that is, you're going to find some resistance there. It's also ADR today. So if we got an ADR hit to the upside on this today, that might be a nice entry short. However, obviously we've got to get there. So it's a good long opportunity now because we are extended on the monthly and we're extended on the 4-hour. So this is the pullback play. So again, look at this propulsion gap here on the 4-hour. That's the same move on the 4-hour, breaking all of this level, slam, push back up into there for a continuation short. The 24 is a long way away as well at the moment. So that's another thing to take into account. The further away you get from the moving average, the more price wants to get back to it. It doesn't like being really, really, really far away from the 24 moving average. We always try and pull our way back to it. And obviously then you get overpowered. So you can see again here, support, 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 slam, resistance. Support, 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 slam, resistance. That's what we look for, the market structure. Okay, so like that area, and by the time we get back up to there, we'll be getting closer to the 24 and it'll be allowed to shoot back down again. So New Zealand US looks like a good mean reversion entry now, but you've kind of missed it already. M5 reversal alert was absolutely ages ago. So the other one we got is the US dollar yen, wasn't it? So US dollar yen, nicely extended on the 4-hour as well. Big push up. Now, the yen, I'm wary of with Ueda talking this week. I'm not sure how to pronounce his name at the moment yet because he's new. Ueda or Ueda, one or the other. But Uda, he's speaking Tuesday, tomorrow morning. So we are going to get some movement potentially off the yen. I'd be very surprised if he didn't come out and say something pretty impactive because he needs to make a statement. So we've just filled this propulsion gap here. Yeah. Oh no, we haven't quite. We're just about to look. So this was that big move, and that's the origin of the move. So we're just pulling back to the origin of that move. Absolutely spot on timing for some kind of intervention or strength to start showing on the yen. US dollar has had a really big run, very exhausted. So good chance that is going to pull back from somewhere, and this looks like a perfect spot to sort of do it from. Also, it could be a flag. We could just slam through, no idea. But we're very exhausted on the 4-hour. But if you look at all the other times we've been exhausted on the 4-hour as well, you've had a nice pullback there. But here, all you got was, you can see my previous trade here. Look, that's the trade I took. Took 5 positions, got out there. So, there is a chance that that's going to happen again, and we're not going to get a nice, decent pullback like that. But this area here, you've got a very nice, obvious resistance here to come back to if you want to take a short on this now. And again, it's extended on the monthly, extended on the 4-hour. Looking at M15, you had the reverse alert during Asia. We've come up, we've retested it. And we're pulling back down. So I would say on this one, because you've missed the reverse alert this morning, the reverse alert's actually there. So you're pretty much exactly back where the reverse alert was. You're just taking it kind of, 4 or 5 hours later, aren't you? But look at where it's bouncing. Yeah, so we are holding price up at the moment. So I would say if we break Asian lows One good position to take today would probably be just taking, put a sell stop underneath the Asian low, and potentially take a break of the Asian lows back down here. So no more than an ADR. So those are your ADRs today. RSIs, very similar to what we've just looked at. We'll have a whiz through those in a second. Just going to quickly go over and look at the buyer scorecard and everything first, though. So looking at the buyer scorecard with the COT change. So we've had a change in the COT report. So we've gone back to where we were before, where it's only +4s or -4s. Yeah, so there's no -3s, 2s, 1s, or anything else in there. It's either you are massively long or you are massively short. There's no in-betweens at the moment. So looking at the buyer scorecard now, the buys and sells are all pretty similar. It's -10s now. Aussie New Zealand, Aussie US, and pound US. So those are the biggest potential sells at the moment. We've got retail sentiment completely offside on these as well. So these are all great opportunities for shorts at the minute. Euro US dollar as well. Pound New Zealand is a good sell, although this New Zealand dollar's just had some very bad news this morning on retail. So we need to see if that New Zealand dollar drop we got in the Asian session this morning holds. If they return to origin on that, I suspect they're just going to ignore it. New Zealand US is a good sell. Aussie dollar CAD, good sell. On the long side, excluding the yen pairs, because the yen obviously is half of that is negative interest rates, which we are not taking into account. We got New Zealand dollar CAD, Euro Swiss, US Swiss, and US CAD. So basically longing everything, the US, and everything else you can sort of see on there as well. So not a lot really, if you're looking at the news this week, that's going to change that. The CPI for the Australian dollar is coming out, so that will change. Apart from that, there's no other figures coming out. Actually, Canadian GDP, sorry, as well. So Canadian GDP, Aussie dollar GDP, and CPI figures are the only things that are going to change on the buyer scorecard this week. Everything else is just normal news. So those are your biases, long and short, best buys, best sells based on COT, fundamentals, and current retail positioning. Retail positioning at the moment, as I say, this has changed a little bit now. We've got the COT report in there as well. The DAX, by the way, just looking at the DAX, is just stuck. We're just sitting at the minute in the middle of nowhere. So that's your 15-minute opening range there. We've got a little bit of a poke out there with that 15-minute. So big propulsion gap. I'd be quite surprised if we don't come down and have a play around in here before we make a move today, but we might do. And if we do go off, obviously there's a big target to aim for to the downside for New York there. So if we can get a good push today up to ADR, we might come back down and test that in New York and then push back up again. We'll see what happens. So sentiment wise, let's look at the +2s and -2s on retail. So these are your strongest buys and sells based on the opposite direction for retail. So at the moment, retail is short US dollar CAD. They also short the euro quite a lot, and pound odd. Long pound US, long gold. So basically the market is long everything against the US dollar. So the market is basically betting on a weak US dollar. So highly likely we're going to get some strength on the US again this week by the looks of things. But Aussie dollar Swiss, all these Swiss franc pairs as well, look, they are still massively long everything against the Swiss franc. So they're expecting weak Swiss franc. So there's lots of opportunities with very, very, very extended. So a +2 basically is over 70%. So if anything is over 70% long or 70% short, it gets a +2 or -2 in the scorecard. So you can see these are the biggest potentials at the moment. So by pound US dollar, the market is totally long on it at the moment, as you can see. Wrong one. We've been coming down dramatically. They've been doing the same thing all week. So it's just a case of, look how I got out way too soon on that one. That was an ADR reversal on that one, by the way. But yeah, it's, you know, it's one of those things at the moment with the sentiment. You've got to realize that they will allow the price to move, obviously, in any direction. They still need to execute orders. Looks like the DAX is coming down and retesting that propulsion. They need to move the market in both directions, obviously, to take profit, etc. So if we get a nice pullback on these today, I'll be looking at sort of yesterday's high, which is all the way up there at ADR as a potential entry point. But you've also got this propulsion gap here, which is around about the previous day's low, which got broken as potentially an area that it might start to drop back down from as well. Don't forget the pound is very, very weak at the moment. So it's even if we do get a weak US dollar and they start to do a profit take move on the US dollar pairs, the pound is the least likely to actually be able to make any movement against it because it's just so weak at the minute. So there's lots of opportunities on the sentiment scorecard there as well. The sentiment EA is still running in testing at the moment. So I'm just seeing how it goes basically this week and making sure it's functioning. So it's still in test mode at the minute. It's made some losses last week, but a lot of this was doubled up positions. Because obviously I put the new version of the EA on with the old trades, so it's doubled up on a lot of these, unfortunately. There's nothing I can do about that. So I'm just testing any trades taken from Thursday last week onwards. So yeah, so that's basically sentiments, basically. Easy done. Right, so we'll have a look at the RSIs. DAX is just pulling back off of those lows at the moment. RSI extensions. So these are your main opportunities for mean reversion. So a lot of these are extended on the hourly and the 4 hourly. So we'll obviously just have a look at each pair, but we'll flick through the time frames as well and have a look at both. So starting off with the Aussie dollar CAD, this is the one that's obviously, we've looked at this one already. It's extended on the monthly as well. So very, very big extension on this one. This was the one that was extended on the monthly range. So it's already done its monthly range this week. Last week. Extended on the hourly. It's embedded on the hourly. So we've got extended on the hourly back here on Friday. And it's just collapsed, basically. Big, strong moves we had on Friday. So we had that massive US dollar strength, which obviously resulted in strong CAD, which resulted in negative moves on the indices. So we're looking basically for some kind of pullback on this one. Absolute textbook support. You can't really get this one wrong. So if you want to draw in support, the best way to draw in support is draw it in as zones. So I would look at that wick there, pull it down to that wick there, and potentially that wick there. So anywhere in that area there for a pullback. And then basically short it out of there. So I'll be looking basically here, RSI extension on the hourly and on the 4 hourly for a pullback. So we're extended, massively extended actually. We are sitting at 20. So this is really extended. If we look at the 20 level, which is exactly where we are pretty much now, and how often we get down to this level, it's not often. If you look, if we scale back, very rare we get to 20. It's not very rare, but I mean, it's not often, is it? It's not the norm. So we look at what we got here. Yeah, lovely big bounce here, which is that spike there. Nice pullback there. Lovely big bounce. It's a pullback which turned into a bounce. That one there, nice pullback. There, bit of a messy accumulation, but you can see in there it pulled back very sharply. You got an ADR out of it easy, and this is where we are now. We're looking for a pullback into that area there. So it's a nice mean reversion opportunity on the 4 hour, very, very nicely extended. Hourly, very nicely extended. So dropping down onto M15, you've just had your reversal alert. M5, you got your reversal alert earlier on in Asia. Actually, no, it's pretty much the same as M15, not far off, is it? And we're just sitting in an accumulation at the moment. So if you take this long with the market reversal alerts, or if you've got the EA set up on H4 and 15, this will be getting you in now. Looking at levels potentially for support. So if this doesn't hold this area here, where we are right now, which is this support here. Yeah, so it's a really good support level. This hold multiple times, was a previous resistance, turned support, bang, 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 bang. So nice looking bounce area straight back up into there. If that doesn't hold, you've got really good support level coming up here, and then you've got this double bottom here, which is a previous resistance. Yeah, so there's really, really good levels coming up. So you got these lows here, which is sort of around about ADR. You got this low here, which is from these wicks to there. Yeah, so that's a really good potential support area as well. So 1, 2, 3. Those are your options for going long. Aussie CAD, nice and easy. Aussie dollar, US dollar. Dances, good luck in your trading. Happy fishing. Okay, you're off already. Okay, bye-bye. Aussie US, extended on the 4 hour, extended on the hourly. So again, really nice, strong extension, good support, resistance areas to the upside. Yeah, so looking for that bounce back up into there, and then obviously continuation shorts, but we are very extended. So we could get a nice, decent pull back up into there, could be up into there, one or the other. So Aussie US on the 4 hour, extended on the hourly, just coming out. M15, you've had your reverse alert this morning. We looked at this one already, haven't we? And M5, you've already had it. So that's a nice extension. Again, counter trend. Yeah, so don't get too greedy. If you see signs of rejection and big strong pushes back, just get out. CAD Swiss, very extended to the upside on the hourly. Still going. It's only just started getting extended now. So this area is broken out. Look, so we had this area that we drew in as our backup, basically. We had a little bounce there, pulled back into that propulsion. Buyers step back in, and it's rallying like hell today. This looks like it's potentially weak Swiss franc. Yeah, looks like it. Yeah, so we've got a very weak Swiss franc so far this morning. So that's pushing up very, very nicely. So looking at the sentiment, it's basically going exactly where they think it is. So everyone's longing Aussie Swiss, longing CAD Swiss, long New Zealand Swiss. It's only those three. So they're long on those three pairs. So nice moves to the upside today. Yeah. Put a lovely double bottom in. Where's all the liquidity sitting right now for everybody that's that long in that market? Yeah, right there. So potential nice drop back down to the downside when that Swiss franc powers up. So nicely extended. The CAD Swiss was. Where are we? CAD Swiss. To the upside. So again, potential short opportunity there. CAD Swiss, yeah, so a sentiment trade as well. So definitely like that as a short. So they're building long positions. Not quite sure why the Swiss is quite so weak at the moment, but they'll get to resistance. Euro odd, 4 hour and hourly RSI extensions. So the hourly we're just coming out. That one's just playing out now. 4 hours just starting to come off of this resistance here. So we've got this area here, which we are basically tapping into, pulling back. So the euro's a bit tricky. We should be longing the euro based on interest rates and everything at the moment. So if you're going to take a short on this, it's kind of counter sentiment. Euro odd. Yeah, euro odd is range bound at the minute. But long bias. So we've got COT bias long. We've got retail are all short on it at the moment. So you want to be looking for long opportunities on it. So if you're going to take a drop on this on the 4 hour RSI, you are counter trend, obviously, at the moment. We are, market structure is very nicely long. It is a nice double top area, which is why obviously it's dropping here because everybody's limit orders are triggering in here. But you've got these propulsion gaps down here to aim for. So there's two really nice propulsion gaps on the 4 hour. That one there and that one there. So retest of that area for a potential bounce play. So that would keep in line with market structure. Yeah, so looking at that as potential resistance or that. So somewhere around there, I'll be looking for a nice bounce. So this is a counter trend. M15, you've just had the reversal alert on that one, which is coming down very nicely. Looks good. And obviously the hourly. If you're taking hourly, you'd be trading off of M5, which you had the reversal alert there. So that looks good. Euro Swiss as well, good short opportunity. Swiss franc obviously is going crazy at the moment. So we've broken out of a new high. We've been sitting in this range now for what seems like forever. So we are actually breaking out now on this one. Euro strength and the Swiss franc at the moment obviously weak, but the Swiss franc is, you know, well known for powering up and dropping dramatically. So we're pushing up into a propulsion now. So there's a chance that we might find some sellers in here. However, I would say this is quite an old propulsion gap. And the fact that we've just been sitting here for absolutely ages sideways, it's difficult to know whether this is going to bounce or not here. I wouldn't imagine we're going to get any movement off of this based on sellers stepping in. But I would expect at some point the Swiss franc to just suddenly power up and drop this. You know, when the power happens on the Swiss franc, it just tanks, doesn't it? So potential good opportunity on 4 hour RSI extension, hourly RSI extension as well. If you're going to get in on a position trade on this, wait for your next M15 reversal, which is all the way back down here. M5, you might get a bit tighter. Yeah, you're getting tighter on M5. The problem you've got is if you take an entry on the next reversal alert and it turns out that it just does want to pump, there's not really anywhere to aim for. You've got a propulsion gap on the 4 hour to the upside, which is probably on the hourly as well. No, it's not. So you haven't got that propulsion gap on the hourly. It's filled. It was that one there. Look, it just got filled straight away. So really, you're looking at this area, which is the next support sort of resistance zone. This old area of balance here where we were happy to transact. We got a little bit of an area of balance there as well. So anywhere in there, really. So what I would do if you're going to get in on this one, it is not so much a counter trend short because the euro and the Swissy tend to move together. So they'll only move when you've got strength or weakness on the Swiss franc, really, because they're both longs. But if you're going to get into this, you've just got to get in and then just take trades on the next reversal at sort of half an ADR to an ADR apart and just wait for that movement to come back down. You know, it will. Unlikely we're going to get something like that. This is the Swiss franc, the bank of the Swiss National Bank announcing they'd lost all that money, and obviously everything just flew against the Swiss franc. All got undone again, obviously, because it's the Swiss National Bank, and they're like, well, yeah, of course it's going to continue going. It's been going for like a couple hundred years. So just waiting basically for some kind of pullback on it. Not the best trade in the world. It's only 41 ADR, so you're better off tying your money up in a different euro or Swiss pair, really. Euro US dollar we've looked at, massively extended, already started the reversal this morning. So this is a counter trend trade. We've already covered this one, hourly extension, 4 hourly extension. Pound odd, that is extended to the upside. So the pound is weak. The pound should be a very nice short if you look at the sentiment on it. Yeah, all the pounds are all sells apart from pound odd. Pound odd is the only one that is a positive. Everything else is a negative. Yeah. We've got no cop bias because the market is short on the pound and short on the Australian dollar. We've got a positive sentiment because everybody at the moment is shorting it, so you want to be taking along. So the fundamentals, as you can see, are very, very mixed as well. So it's one of those pairs you can take in either direction, really, because there's no advantage going either way. There's no currency which is massively stronger than the other one. So where we are at the minute is kind of in no man's land. The next resistance is coming up somewhere around there. We've got nothing really in this whole down move that you could pick out and say, well, that's a nice support resistance area. You've got a little bit of an accumulation in there. Very it's like 3-4 hour candles. So it seems to be reacting there though. So we are extended on the 4 hourly. If we're just going to go in cycles, obviously we're extended again. Yep, so drop back and potentially pushing again to the upside, but equally, it could push to the downside. We've got news coming out this week. Yeah, we've got the got the Aussie dollar GDP. We've got Bailey speaking for the pound, and we've got the CPI figures. So, we could get some very good or bad news on the Aussie dollar, and that will obviously drive it in either direction. So if you're going to take this reversal alert on this 4 hour extension, obviously short, you ought to be playing it back into that propulsion gap somewhere, sort of looking for around about half an ADR to an ADR move. It could absolutely tank, depending on the news, and go for that low. Who knows? But it's a good extension, good RSI extension, so potentially a good opportunity to get in. Hourly, you're also extended. Again, this is a trade I took on this one last week. Yeah, so same thing. This was an ADR trade. So it was an ADR hit, scaled in twice, got out. Same sort of thing. Looking at that propulsion, ADR is where I'd look to go. That is assuming we're going to obviously put in a new higher low market structure, in which case then you'd only want to target that. If you think that this is a peak formation, we're going to drop and then put in a lower structure. Doesn't matter, does it? You can just hold it. So yeah, good opportunity on the pound odd. Pound US dollar. So that's just come off of a bottom. Obviously, US dollar strength. So it's really hard to tell. I just don't want to be going against the US dollar at the minute, really, if we can help it. I do think we've got a good chance for a pullback on it. But look how far RSI got on the hourly. Yeah, we got extended. This is the 4 hour here, but we got extended on the hourly. We've popped up. We're back at midline now, 50%. And look what we've done. Not really gone anywhere. We're still in an accumulation. So very, very, very strong. Yep, DAX is just pushing again. So out the highs. So long second DAX on the 15-minute breakout. So yeah, pound US dollar, nice bounce. This is a technical play. Yeah, there's a load of limit orders triggering here. We saw them trigger first time. Now they're triggering a second time. So again, this is a textbook stop hunt. Get down to there, trigger your limit orders. Everyone goes long, stops go under there. They come down, they take out the stops, and then they push higher. Now everyone goes long again. Where's the liquidity? Under there. That's what we're going to do. We're going short. But I would not want to really, I mean, you've missed it. If on the 4 hour RSI extension, you've missed it. Look. There's your 4 hour RSI extension. There's your 15-minute reversal. You've already gone. Very tight, somewhere up into there. And then I'll be looking for shorts. New Zealand dollar CAD, extended on the hourly. It's already gone, missed it. There's your 5-minute reversal alert, you've missed it. So 1 hour RSI extension. There's your 5-minute. So it's already gone, that one. That will come off of being extended. Oh, it's on the 4 hour. No, it's on the hourly, sorry, yeah. So that'll come off of being extended now anyway. It's already gone. New Zealand dollar, US dollar. So extended on the hourly, extended on the 4 hourly. Again, New Zealand dollar, US dollar is a sell. We want to be selling everything against the US dollar at the moment. So I'd be looking for opportunities up at that area. So support, 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 smash, resistance, pop. So yeah, very extended. So you're playing the pullback on it. Again, you've kind of missed it. 15 minutes gone, 5-minute went ages ago. Trade's already played out. You're coming up into an accumulation here, so you might find a bit of resistance forming, but potentially this has got a lot further to go. So a V-shaped recovery on this morning's bad news on the New Zealand dollar. Push up into this propulsion gap or into this propulsion gap. Yeah, resistance is not going to hit to the pip on one of these wicks. It's going to be somewhere in there. You're going to find it start to weaken and then drop. So that's what I'll be looking for. US dollar Swiss. Someone's asked for US dollar CAD. US dollar CAD came off of the highs. So again, you want to be buying the US dollar CAD. So look for opportunities to buy it. you've got a nice support area here. Anywhere, I mean, there's no hard and fast support on this really, somewhere in there really. So when you get into that area, look for a reversal alert and potential long. Yeah. There's a propulsion gap to the downside on this as well. So we've got, actually that's tested, isn't it? Yeah, they've already tested it. So we've got this propulsion gap here. It has been tested twice. It may be able to get back down into there. Obviously, look at what you're up against. It's going to be quite hard, I think, not to find enough limit orders to trigger a long off of that. But you never know. It depends how weak this US dollar is going to be. It's obviously having its profit take move now today. How long it's going to last? Could be 2 days. Could be today. It could just take the Asian lows to go and fly. No idea. But we're running up into this resistance, obviously, at the minute, which is a big old area somewhere in there we could react. We reacted straight off of that double top, which is the limit orders just triggering on Friday. I don't see any reason why it shouldn't break through that high. So I'll be looking for pullbacks and longs. But at the moment, obviously, you just had a reverse alert short on M15. M5, you had it earlier today. But yeah, take profit somewhere in there. But that's where I'd look to get in long. US dollar Swiss. Pound odd. We'll have a look at that in a sec. US dollar Swiss. So we got that zone on US dollar Swiss, which we are just in at the moment. Just take that off. Lots of lines on this one. So 4 hour, massively extended. So if you look at the 80 zone, yeah, that's your 80. Again, whenever we get above the 80, yeah, boom. That one wasn't. We had a little reaction there, but that was in a parabolic move. So, this could be a parabolic move. We don't know. But typically, obviously, when we get an RSI extension to the upside above 80, we get a very, very nice sell-off tend to kick in. Didn't quite touch it there, but on there, not quite there, but obviously you can see you got the sell-off. So I would expect a sell-off. Yeah, so the US dollar has been pushing very, 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 very hard. We've had amazing figures on unemployment. The Fed is pumping it. It's all going brilliantly. However, the market has got to breathe. It has got to take profit. We are massively extended on the 4 hour on US dollar Swiss. Again, we've got a weak Swiss franc this morning. So if you look at, this gives you a really good indication of what's going on with the US dollar at the moment. Look at the Canadian dollar Swiss pushing. Look at the euro Swiss pushing. Look at the pound Swiss pushing. Look at the US dollar Swiss not pushing. So that tells you that we've got a weak US dollar because everything's pushing against, a weak Swiss franc because everything's pushing hard against it. That shows you how weak the US dollar is this morning. It can't even beat the Swiss franc. The Swiss franc is weak. So the US dollar is actually weaker than the Swiss franc today, which is saying something. So we're in an accumulation here at the moment. Highly likely we're going to get some kind of pullback. When this Swiss franc weakness ends and this Swiss franc sort of stops being weak and pushes, we should get a really nice drop. We're extended across every time frame at the moment. Obviously, the 4 hour, the hourly, your 30-minute, 15 we just come out of. We haven't had a reverse alert on the 15 yet. We did have one this morning. So you would have had a reverse alert on that candle there because that high in Asia was made. They've just swept the Asian highs and taken that liquidity. So now we've got a new high and we've got a new reversal alert. So it's going to be there. So that would kind of form your W pattern, or sorry, M pattern in this case, when we break that Asian midline there, really basically is where the reversal alert is. So if we can break that, potentially we've got a flush down into this propulsion. It's not really a propulsion because it wasn't an accumulation. So I would say that area there is where we'd be looking to come down to today, if that happens. So with a weak US dollar, we never know how long that's going to be. We could have this afternoon the US dollar suddenly power up when the New York opens. So it's difficult to tell, but it's massively extended. The danger with these is, as we saw back with that parabolic move when we were looking at US dollar Swiss extensions before. If we're going to get some kind of parabolic US dollar move, what we will get is just an accumulation push on the lower time frames. I don't think that's going to happen. The US dollar is strong, yes. However, it's not so strong that it can overpower everything. Yeah, when we're going back to March last year, which is when this particular move happened, we were in a very, very different situation fundamentally. At the moment, the US dollar is approaching peak rates. We're approaching peak interest rates, as is most of the other currencies. Some of us are way behind, and we're going to need to do a lot more. However, the US dollar is getting to the point where we are starting to hit the peaks. So when you get to that peak interest rate, what you tend to find a currency do is just sort of flatline, and then we start to drop. That drop is not going to come until 2024. However, in between, obviously, we can do whatever the hell we like. So I think with the US dollar, I don't think we're going to get a parabolic move. I don't think there's any currency out there really which is so weak that it's going to be able to do that sort of movement. That's the Swiss franc there. That was the interest rates changing on the Swiss franc. That's why that one collapsed. Yeah, massively extended. So I don't see any reason why we shouldn't be looking for shorts on this one against the US dollar. You've got lots of levels coming up on the hourly. However, they're quite old. We're going back to November last year now. So when we're looking for potential bounce points, there's a few coming up. So if this area here that we've just broken out above is going to hold, we're going to accumulate and push. So you'll be looking at somewhere around about ADR, and then somewhere around about 200 to 300 ADR. Yeah, so either it's going to go and you're going to get the trade and it's going to work, or you're going to be in this for a bit. Don't know. But yeah, very, 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 very nicely extended. So you can wait for the 15-minute reversal alert and push back down into somewhere, just around about half to 1 ADR move to the downside. US dollar yen, very extended. US dollar yen is a massive buy. If you take the interest rates off of that, because it's always negative 0.1 interest rates on the yen, we're down to still a +4. So it's still a buy. That is because of COT and retail sentiment. COT, I think, is still going to be long. So even though we haven't got up-to-date COT data, the COT data that we've got right now is going back to the 31st of January. So if you go back and look at what happened that week, we had the rates changing, right? So the figures that we've got right now are here. Okay. So what we've just had released are the figures that we should have got on Friday the 3rd, which take into account what the positioning was on that Tuesday. On that Wednesday is when the Fed fund rate changed, and we had that FOMC. We had that strong push. Everything came down against the US dollar. Then we had that little bit of a pullback, and then we had the unemployment rate coming out better than expected, and then we had that smash. Yeah. So on the chart, when you look at the US dollar, FOMC and unemployment's in there somewhere, isn't it? Yeah. So that's unemployment. FOMC was 3rd. That's unemployment. Yeah. So FOMC was in here somewhere. So there's your unemployment change, retest, and off we go. So the COT data that we're seeing is from here, before this happened. So I don't think that COT data, when we get any updates, is going to be anything less than 70%. This is going to strengthen. Yeah, this was an unexpected good news event, and they were already long the US dollar. So this is only going to get stronger. So the yen, if you look at yen from a COT perspective, they are all short the yen. Yeah, so that is an unknown. We don't know what the sentiment actual is on the yen at the moment. But obviously you can see that we've had a big strong push because we have a long US and short yen. But we've got Ueda speaking this week. And we know that when the US pushes against the yen gets annoyed, and then it has an intervention. Yeah, so we get these interventions coming in every now and again where they just go, nope, we are strong, we are pushing. So any intervention could come at any moment on this. 150 was the trigger. What the next trigger is going to be for the yen to intervene, I don't know. So I'm unsure about whether to take longs against the yen at the moment. I'm undecided completely on it, but we're very extended on the 4 hour. We were extended on the hourly, and you see it's obviously starting to come down now. But look at the extent of extension that we had. So we started to get extended there. People will have been shorting it here, and it got extended and embedded above the 80 level as we had that push. This is a parabolic move that we had on Friday. We've had the reverse alert on the hourly, but look, we're almost back down to midline 50. So no reason why we couldn't just have an accumulation or sort of move into a flag pattern for a long. And as you can see, it's rejecting this propulsion move at the moment. It's not really a propulsion move because it's not an accumulation, but it's just a strong push, isn't it? We had loads of buyers, no sellers. The buyers are stepping in, they're propping this position up. So if you're going to short this, I wouldn't go anywhere further than an ADR, half an ADR move to the downside. However, I think there's a good chance that we might get some more strength on this and a weak yen. All depends what happens tomorrow morning with Ueda. Yeah, so he's going to pump it or dump it one way or the other. So we will see. So I'm not too sure about that one. US dollar yen. Pound odd. Someone wants to look at pound odd. So your bias on the pound odd is we've looked at this one, haven't we? Yeah, we've already looked at this, haven't we? It's a long, because I said that's the only one that's a long. Yeah, we've looked at pound odd. There you go. Big Papa, can you explain how to read MT4 backtest report, specifically the profit factor and expected payout? What's the difference between both of them? That's one for Google, really. I mean, it's basically it's just higher the better, really. So whenever you run a back test, what? Yeah. I'll do a quick one that's just using control points, maybe. I don't know what dates I've got in here. Let's try that. Let's just do 6 months or something. That should load pretty quick. So when you're looking at the report, I don't even know what this is going to do. Oh, this is that tight set file. This is horrible set file. That's not the right set file, is it? This is the old version of the ORB set files. That's not going to work, is it? I haven't got the right set files here. But basically, when you look at the report, the profit factor is basically your return, kind of like your return on drawdown. So how much did it lose as opposed to how much did it win? Yeah. So if anything over 1 is good, the higher the better. Your expected payoff is roughly what you would get per trade, I believe. I think that's what the expected payoff is. I've never even paid attention to expected payoff. I never look at it. I'm not really interested in that. I'm interested in what the profit factor is. In fact, I don't even use that. What I use is a different calculation. If I find my spreadsheets. So I do a different calculation. I do return on drawdown, which to me is more important. Yeah, the return on drawdown, which is this calculation here. So this is your profit divided by your drawdown. Yeah. So the profit is 37,000. The drawdown was 11,000, which gives me a return on drawdown of 3.35. So I got 3.35 more than my drawdown. Yeah, that's what I'm more interested in. This, you don't get this in the backtester, but it's a simple calculation. If you just export the data and then divide your profit by your drawdown amount, that gives you your return on the drawdown. Yeah. So this is what I'm interested in, which is basically if I have something that draws down by 11 grand, how much more is it going to get me? To me, that's much more important. So I'm happy to accept a large drawdown if something is going to give me, where's my, that just restarted. So my laptop's just restarted. If it's going to give me a massive amount of profit, I'm happy to accept a larger amount of drawdown. But as long as the return on the drawdown is better. Yeah, so that's what I pay attention to. I tend to sort it by this. This is more important to me than anything else. But yeah, I don't look at expected payoff at all. You see the hedging strategy has a high net profit but low profit factor. Yeah, that's because it will have a high drawdown. So if you've got something with a very big drawdown and it makes a very big, a sort of medium to high profit, it will have a small profit factor. You can read up about all this on online. If you go to Google and search, or go to the MQL5 website, it'll all be detailed on there on the strategy tester and what everything means. Mean reversion strategy has a higher profit factor but low net profit. Yeah. So mean reversion is a slower, more stable, safer strategy than hedging. Hedging is a very high risk strategy. Think about it. What you're doing is you're saying, I'll go long and short and I don't care which way it goes. You're going to be very wrong on one of them. So you're going to go into drawdown on one quite harshly. Hedging is more risky, but then again, it is consistently profitable. You've just got to control that drawdown. And you will go into big drawdown with it. You know, hedging's a beautiful strategy. The hedging set file, the mean reversion hedging set file is great, but it will get big drawdown. But, you know, with high risk come high return. What's your risk tolerance? Most people's risk tolerance is small, which is why the RSI mean reversion tends to be the one that everybody goes for. So, and from a position trading perspective, your H4 RSI or H1 RSI mean reversion is the better, safer strategy because it's longer term. Don't forget also hedging, you're running it on M5, which is why I'm running this experiment at the moment, because I'm looking at an H1 hedging strategy at the moment. So it's going to be very similar to the M5 hedging strategy, except it's going to use H1 timeframe. Yeah. So for me, what I want to do is I want to start a new strategy that's going to bank regularly, that I can potentially use in prop, but you can't use M5 because at M5 you're trading chop and you're at the mercy of the markets. Basically, whatever this thing decides to do on M5 is kind of irrelevant to where it's actually going. It's going to go up and down and do all sorts of stuff. On the hourly charts, you're filtering out an awful lot of that chop. So you're going to take a lot less trades in a hedge. So you'd have taken a hedge there and a hedge there. And you see there's only 2 trades you'd have actually taken with the hedging set file if you were on the hourly. If you're on the M5, you'd have been in and out and in and out and in and out and in and out. So what I'm determining at the moment with the experiment that I'm running is with taking 3/4 of an ADR and then doing drawdown control, what sort of drawdown are we going to get into? Because I'm trying to calculate what the best settings are going to be for H1, and then I'm going to do some detailed back testing on H1. Just an idea I've got, basically. And obviously that will all be done in the backtester. Lastly, how to judge robustness of a strategy based on the backtest report. Right, so robustness testing can be done in a number of ways. Jarman's just said there's literally a description on the MT4 help of all the report data. There you go. So yeah, so just if you go to MT4, MQL5 website, there will be a full detailed explanation. But robustness, robustness is a very, very important. So there's two areas that I focus on with robustness testing. There's many ways to do robustness testing, but the main two that I focus on are system parameter permutation and out of sample testing. Yeah. So when you run here, for example, so this is a system parameter permutation test. Can you see all this data? Not sure if I've got this in the right place. Pretty much, you can see it, can't you? So this is a system parameter permutation test. So what I do is I take the EA settings, and then I will test multiple variations of these settings. Okay, so in this particular case, I tested 80 different variations of percent target, whether to add to an opening range. This is using the opening range breakout EA, by the way. Whether to add to an opening range breakout, and if so, what should be the additional distance. So there's three parameters there that I'm testing. And what this does, and the way to do this is you put it in the optimizer. You go to you tick optimization. In the properties, you select the properties that you want to test. So in this particular test, I was testing percent target, whether or not to add to an ORB or not, and what distance. So to replicate that test, what I would do is add to singles. I would tick that and tick that. What was the other one? Percent target. And I would tick percent target. There, profit percent target. Yeah. So I would say, I want you to target 1% as a start, and I want you to go up in 1% increments until you get to 10%. Yeah. So that is 1, go up in 1, step in 1 to 10. So what this will do now, when I run an optimization, is it will test it throughout the time period that I'm testing, and it will start targeting 1%. Then it will rerun the test at 2%, at 3%, at 4%, at 5%, all the way up to 10%. Yeah. And then it will run that test again, but this time it will use the add to singles. Yeah. So when we get a breakout and we move beyond our breakout level, it will add a position, and we will test it at 500. Yep. So 50 pips. And I can say, I want you to test it at 250 in one. I want to start at 200 rather. So 20 points. So when an opening range breakout has gone 20 points in my favor, I want you to add another order. So it will retest it again with all of those different system parameters that I put in there, i.e. profit target of 1 to 10%. And it will test it with the add to trades turned on and turned off. And it will test it with a distance before the order is placed of 200, 300, 400, 500, whatever. Yeah. And what that does is it multiplies all of these different tests together. So it takes every single possible permutation of those parameters, which is why it's called a system parameter permutation test. Yeah. So this is every possible parameter permutation. There's 80 different combinations of those three inputs. Okay. So it tests every single one of those over the same time period, and it gives you all the results. So as you can see, there's 80 tests done here, and all 80 of them passed. So what it's saying is it doesn't matter whether you target 1% or 10% or anything in between. And it doesn't matter if you add to your opening range breakout or not. And it doesn't matter if you use 10, 20, 30, 40 or 50 points when you add yours. Every single permutation of all of those combinations will be profitable. Yeah. So this is robust. So I've said, test this, all of this, and change the parameters, change the test variables, do something different to what I've asked you to do, and tell me what the result would have been. And as you can see, the return on drawdown varies from 4.63 all the way down to 0.69. So this still made 10 grand in profit. Yes, it made 15 grand of drawdown, but it didn't lose any money. Yeah. So this gives me confidence that the settings I'm using in this opening range breakout EA, it doesn't matter if I change these parameters, I'm still going to be profitable. So that gives me confidence in the strategy. Yeah. So I'm giving it leeway. It's like saying, I'm going to take a long on the pound odd, right? And you give 10 people this chart, okay? And you say, right, pick for me on this chart where you would go long. So someone will go, well, I would go long exactly here. Someone will go, I'll go long when we get to the bottom of that line. Some will say, I'll go long when we get to the top of that. Some will say, I'll go long at ADR. Some will go long down there. Some will say, I'm going to wait till it gets all the way down 200 ADR to the top of that propulsion. Some people will say, I'm going to take the long at that double top. You see? So if you're going to go long on this, there's 1, 2, 3, 4, 5, 6 different permutations of a long entry there. Yeah. So let's say, for example, what the pound odd did was it dropped all the way down to there and then bounced. What you would have is that one, and that one would give you a profitable return. Those three would never have triggered. So they would have given you no return at all. Yeah. So this is a permutation test. You're testing the different levels or the different parts of your strategy. The more permutation tests you do, and as you can see, I've done thousands of system parameter permutation tests on the DAX and the NAS. The more of these you do that come out with a positive result, it just shows you that that strategy is robust. Yeah, it's like testing a strategy. So if you had a moving average or an RSI strategy, for example, really simple. Look, you got an RSI high, you take a short on it. Yeah, that one didn't work. That one did. That one did. That one did. That one did. But did it? Yeah. So if you took RSI extensions on the hourly short every single time, would you make money? Depends, doesn't it? Where is your stop loss if you're using one, and where is your take profit? So if you did a system parameter permutation test here, you would say go short with a stop loss of 20 pips and a take profit of 20 pips, 30 pips, 40 pips, 50 pips, 60 pips. Yeah, for example, I'm just pulling these out at random. But there's your entry. Yeah. So the 10 pips would be profitable, the 20 would be profitable, the 30 would be profitable, the 40 would be profitable, the 50 would make you a loss. Why? Because it pushed up and it took out your stop loss. Yeah. So the system parameter permutation test performed there had 1, 2, 3, 4, 5 different versions of a TP, and it gave you 4 of them being profitable. So that's pretty robust, isn't it? So what it's saying is if you go short when RSI gets extended with a 20 pip stop, doesn't really matter what TP you use within reason, you're going to be profitable. Robust strategy. But what you've then got to do is out of sample test this. So when you perform any test in the strategy tester, you will use a date range. Okay. So when you do a test and you get a positive return and you then go, right, I'm going to test it with different system parameter permutations, and you get lots of different profit curves, but they're all profitable, most of them. Yeah, they're all making you money. That's great. But what you are doing is you are only testing whether or not, although those parameters were profitable over that period of time. So what you then have to do is what's called an out of sample test. So you have to go back and say, right, let's do the same test the previous year. Yeah, thanks for the follow, whoever that was, Maximilian. So now I'm going to test exactly the same parameters, but I'm going to test them the year before, because the year before the trading conditions are different to this year. So if you still get all of these profitable curves on all of these different system parameter permutation tests that you're doing, that means that strategy is robust. Yeah, because it worked this year with all of these parameter permutations. Let's say I run those 80 tests. Every single one of those 80 tests came out as positive. I then took it and I ran it on the previous year, and they all came out as profit again. Yeah, that's robust. So let's make it even more robust. Let's do a second out of sample test. Let's test it in 2020. Let's give it a real test over COVID. Yeah. If you test it now with 80 tests and you get 70 of them come out profitable, but 10 of them fail, that's still bloody robust, isn't it? If that thing survived COVID, brilliant. And the way you test timeframes is using the daily chart. The way I do it is what I do is I find the ATR of the pair or the ADR of the pair. So using the ATR indicator. Where are you, ATR? What's the ATR under? Oh, it's an oscillator, isn't it? So I'll take the ATR 10 basically of the daily chart. And what I will do is I will look for periods to test out of sample. So I developed my strategy up to end of December from the middle of the year. So say there. Yeah. So that's where I initially did my testing. Okay. There was a massive change in the average true range there. So if my strategy survived this huge spike that we weren't expecting, it's robust. But I need to also test it in a market which is flat. So I'll pick a period of time where we had very little movement. So I'll go back and I'll test it here because this condition of market here, really tight range and really flat movement, is totally different to this huge volatile mess that we've got this year. And then I'll test it over this period here where we had some medium volatility, quiet volatility, medium volatility, quiet volatility. Yep. So if I can test my strategy here or develop my strategy here, test it there and test it there, and it all comes out of those 80 tests that I've run with sort of 65 to 70% of them or more, or normally 65 to 70 of them. I look for something like 90% usually of the test data being profitable. That tells me it's robust. Yeah. This strategy and all the different variations of this strategy I've tested over 3 different periods of time in the last 3 years has all come out with a win. Does that sound like a good strategy? Yeah. If you develop a strategy, and this is what I see a lot of the time, people get a strategy and they build it on the hourly chart, yeah? And they will back test their strategy from, let's say they go back to yesterday or Friday, for example. They'll back test it all the way to November, end of November. So let's say they start the test at the beginning of December and they test their strategy over all of this time, yeah? So they've tested it for all of December, all of January, and pretty much all of February. That's 3 months worth of back testing. Yeah. So you develop a strategy and you optimize it and you make sure you've got exactly the right RSI setting, exactly the right moving average so that it creates a beautiful profit curve in that back tester. Yeah. If you take that back test and you put it back to the previous 3 months and it doesn't produce the same profit curve, what's happened is you've curve fit that strategy to this time frame, this period of time. So what you've done is you've adjusted the system parameters in your EA. Yeah, so you've changed whatever needs to be changed in your EA to get a profitable profit curve in here, yeah, over that period of time. This period of time is totally different to the previous 3 months. Price will move up and down, but you will not get exactly this happening again. So you've got to test it back there. And you've also got to test different variations of the strategy, different system parameter permutations. The big ones to test with most systems are the TP and the stop loss. So if I go to let's try that one. That's a pretty good back test. So this is back testing the 15-minute opening range breakout on the opening range breakout EA on the DAX. We are testing whether or not the amount of profit to target, the percentage of profit to target, whether to take an additional opening range breakout, and if so, what size, and what size of trailing stop loss to use. Yeah, we're testing all 5 of those parameters over a period of a year, okay? Oh no, sorry, 6 months this is. So with all of those different parameters, we've got 1,600 back tests. So the EA performed 1,600 back tests, right? The return on drawdown ranges from 3.84 all the way down to 0. Yeah, and only 1,536 of them were profitable out of 1,600. So that's still pretty good. This was it 1364? So yeah, 1336. Let's call it 250. So out of these 1,600 variations of the strategy that we tested with all of those different parameters, out of those 1,600, 1,350 of them roughly were profitable, which means that it's pretty robust, isn't it? Doesn't mean it's going to make you money necessarily, but it means it's not going to lose you money. It's unlikely to lose money. If we can replicate this test over 2 previous time periods and we get roughly the same results and roughly the same return on drawdown with the same settings, what we can do then is say, right, we're going to pick some of these settings which are profitable at the top here. So let's say anything from like 2.5 R upwards. So we've got 300 variations of the strategy there, which give me a 2.5 R return over a period of 6 months. That makes sense? That means it's robust. I never pick the top one because this is what's called an outlier. So when you do a back test and you've got 1,600 results, you will have a bell curve of those results. Yeah, it goes like that. So up here, you've got your 3.84, the maximum return on drawdown. Down here, you've got your 0.01, your worst possible case. What you want to pick is something that appears sort of in the middle here. So if you scroll down roughly, I usually use about a third of the results. If you've still got something above a 2R somewhere around here, I've got 2.25 R here. If you pick one of these, they're bang sort of in the middle of that bell curve. So these are what we would class as the average type of result you'd get. Sometimes you might get something there, sometimes you might get something there, but if you pick something in the middle, it's more likely to happen. And you'll find that these, if you backtest these settings, the 2.27s and the 2.29s and the 2.25s and that sort of thing, if you test these over multiple time frames, you'll find you'll get very, very, very similar results very regularly. If you backtest the top ones that lie at the top of the bell curve, these are what we call the outliers. These are less likely to happen again in different periods of time. So if you test this top one here, these exact settings over multiple periods of time in the past, you'll find that they have a lot less likelihood of occurring again because they are outliers. These are extremes. These are not the norm. These are not the norm. This is the norm, and the vast majority of your results will appear within the norm. So as you go down, you'll see we've got 3.84, and then we go all the way back down to these 0.01s. Yeah. When you get into the middle here, the sort of the twos and things, the high ones, low twos, these are what would typically be your results. So you're going to get something like a 55 grand return from a 27 grand drawdown or whatever it may be. But these are highly robust strategies with a long-term edge. You have 5 of these running. Yeah. You're going to have 5 strong, robust strategies. Then you can't really fail not to make money as long as you let the edge play out. And the edge will, when you backtest the edge, you will see that your profit curve will do this. Because market conditions will either be right or wrong for the strategy. Yeah. There is no strategy that works through all market conditions. It doesn't exist. Okay. Look at the ATR. Look at the ADR. Yeah. Your strategy settings, and whatever your strategy is, whether it be an RSI strategy, whether it be a mean reversion, a breakout, a trend strategy, an opening range breakout, low time frame strategy, a daily pin bar strategy, whatever it be, doesn't matter what your strategy is, there will be conditions it will work in and conditions it won't work in. The conditions are caused by the market. You have no control over the conditions. Okay. So what you can do is you can filter out things So let's say, for example, when we get these high volatility areas, our strategy doesn't work, it only works in low volatility, you can put an ADR filter on it and say, don't trade in that condition. Yeah. But what will happen is your profit curve in a strategy tester will never be that. It will always be like this. And you'll have periods of what we call stagnation, where it won't make any money. And then it will have a peak because the conditions change. Let's say, for example, this EA that you built or the strategy that you had only worked when ADR was increasing. So what you'll have, your profit curve will be like that. And then it will go like that. And then it might have a peak, and then it will go like that. Then there's another peak. Yeah. Then another peak, another peak, another peak. Then it makes a peak. Yeah. Yeah. Conditions aren't good here. So what we do is we make a little bit of profit there. But this whole period from, where are we, November through to August the following year, we didn't make any money. And this is obviously a daily strategy, I guess. But yeah. But then we have peaks and peaks, and it does that. Because you cannot change your strategy to change conditions. Yeah. So if you have a range bound, a low volatility range bound market, and you're playing a trend based strategy, you're never going to make any money. You'll make a killing there, and a killing there, and a killing there, and a killing there, but you won't make any money in here. You won't make any money in here. You won't make any money in here. Might make money there, but you lost money there. Make money there, make money there. That was a lovely period of time. You'd have had a lovely profit curve there. But your trend breakout strategies will have periods where they can't make money. And that will be shown to you in your strategy tester in the equity curve that you see in the graph. Okay, so that's backtesting in full. That's how I backtest for robustness. After you've tested and have proven the robustness based on the backtesting, forward testing, or using it in live, at what point do you conclude that the strategy is not working anymore and ditch it? It depends on the strategy, really. If you've got, I don't have strategies. I don't do that. I mean, what you're sort of saying, I don't really have strategies that don't work in all market conditions, because I position trade. So if you've got a stop loss strategy, it's really down to you when you decide if it's not working. So, for example, the opening range breakout, you'll have periods where the ORB will just do nothing. It won't make money. And then it will kill it. Like last week for 2 days, it made me $5,000. But the days before it had lost or broken even. It hadn't had a very good period. But if the opening range breakout, for example, EA, I had, 2 losing months in a row, I would probably revisit the backtester with the strategy and just have a look at it and run it again. And just go back in time and see, what happened over a period of time. And then you might want to change your settings. But as a trader, you've got to adapt. Yeah. So, for example, the RSI, I was using a different RSI setting on the hourly and 4 hourly for years. I've now changed the RSI setting to 14 on both. The reason I've done that is because ADR is contracted. So you change, an EA won't change, but what you can do is change the settings in your EA. So if you notice that an EA is suddenly flatlining and not making a profit, go and have a look at what's going on. It's usually because the market conditions have changed and they're just not suitable. But if the EA is suddenly making a loss and it's a bigger loss than you experienced in your backtesting, something's changed that's wrong. A Ukraine war's kicked off. We've never tested the EA through a war. Has the war massively affected your EA? Why? You need to investigate. But I don't know what the time is when you do that. I would look at an EA and say, right, it's been losing me money. In my backtesting, it never had a period of more than 3 weeks where it made a loss before it made a new high in my equity curve. Right, in this graph. So let's say this graph was doing that. Yeah. Right. So If the period of time from that high to that high where it made a new profit high in my equity curve was 3 weeks maximum in my backtesting, and I've been running it now for 6 weeks, and what we've had is a very slow movement to the downside, I would say, right, well, why is this not happening? What's changed? This never happened. I tested this for 3 years and I never got more than 3 weeks where it didn't make a new equity curve high. What's changed? And investigate. If you change or adapt, isn't that curve fitting? No, it's adapting to the market. You're adjusting for current market conditions, which will change again. And this is the thing, you know, and I've said this until I'm blue in the face for 3 years now in these live streams. There is no EA on this planet that you can leave to run indefinitely, go and sit on a beach, drink a Mai Tai and make money and become a millionaire. It doesn't exist. I'm nearly 50 years old. I've been trading for 15 years. I haven't found it. If it does exist, it's bloody good at evading me because I've spent tens of thousands of pounds finding it and it's not there, right? It doesn't exist. And the reason it doesn't exist, which I now understand, is because the market conditions change on a regular basis. When you understand that market conditions change, yeah, look at what happened here with COVID. Look at where our average was on our ADR. For that whole period, your average is somewhere around there. Yeah, we got high peaks above it, we got low peaks below it, but somewhere in the middle there is our ADR average. COVID, look how long it took to get back to similar market conditions. Yeah. If you sat through that entire period trading the same strategy, you're dead. You've got to adapt as a trader. You've got to realize that things are not as they used to be. I need to change. Look at the S&P 500, prime example. Look how different this thing is. Go to the daily. Yeah. Look how different this thing is when we're in a bull market. Yeah. Bull market. I can tell you, I can point on this chart without even looking at it where the bear markets are. Got a few bear volatiles in there, but yeah, look at it. You got to adapt. This changes when you go into a bear market. Volatility changes. Your strategy has to change. The direction you trade has to change. You have to mean revert instead of trend trade. You've got to change. You've got to identify, which is why I'm saying right now, I don't think we're back in a bull market. If we are in a bull market, I'm going to set my EA going that makes me a fortune there and looks after my pension fund. I'm not setting it live yet because I don't think we are. However, if we break those highs and it proves me wrong, then I will start to now do trend trading to the upside. I got to adapt. My EA has no clue. It can't do this because it can't read the market. It doesn't read the news. It doesn't go over to financial juice and understand that the Bank of Japan's governor has changed. Therefore, we might have new monetary policy coming through in the yen. You've got to change. You've got to adapt. It's a bloody hard job, which is why you earn 6 figures a year doing it. Yeah. So is an airline pilot. So is a surgeon. But they go to school for 6 years to go and get a 30 grand basic job as a doctor. Yeah, this thing, you can't crack this thing in 2 months and go out and be a millionaire. I don't care how many of these YouTubers say this is the simplest strategy in the world. All you do is you draw a block on the chart. When it gets to it, you take a short. Go on then. It's not the way the world works. You need to know why you're taking a short. And there's all sorts of other things that come into it. EAs can't do that. EAs, however, can help you execute strategies. It gets me into the DAX long when I want to get long on it, right? I'm long on the DAX right now because I have an edge that tells me that after a 15-minute opening range break has gone, there's a good chance of making profit. Yeah, this is all on full auto, but I am watching this out of my right-hand eye now, I'm looking at the chat on my right screen. My laptop is sitting to the right now with the DAX open, and every couple of minutes I'm looking at the DAX. The EA is trading it for me on auto, so I don't have to press buttons, but I'm trading this myself. And I'm getting close to thinking this isn't getting far this morning. It's probably going to come back and retest this. But it's break even, so I don't really care. I've already made my money on the pre-market 15. I've made 3 grand, 3.8 on that already this morning. So who cares what this does? But I'm the trader. So And again, I'll stress this. Every single backtest you do in the strategy tester, whatever it says, has absolutely nothing to do with what's going to happen in the next 6 months. Yeah. If Putin decides to press that button, this market is not going to trade the same. So you need to change the way that you trade. How do you change? Don't know. Let's have a look at the market and see where it's going and try stuff. There's nothing you can do, unfortunately, to just have something that makes you money. But you can test the robustness of a strategy over different periods of time that we've had in the past. So we know that if those things happen again in the future, the strategy has a chance of working. But this thing is random. You cannot tame randomness. You can just get in and use risk management to give you that edge. But you've got to change, yeah? This is why I'm using a different RSI now. I'm using a 14 instead of a 21 because the market is contracted. This ADR is so much smaller than it was. So therefore, if I want to use a 21 RSI, I'm not going to get any signals. I'm not going to get any trades. If I can't get any risk on, I can't make any money. So I've got to adapt. And at some point, I'm going to get stung because the market is going to go back to a condition being different. And the 14 is going to get me into trades too fast and I'm going to get into squeezes. And at that point, I'll suddenly go, right, market looks like it's expanding now. Our ADRs are back up to what they used to be. Pound New Zealand used to be 350 to 400. We're trading at 163 at the moment. Yeah. When this thing starts to get up to 300 ADR, I'll be thinking, right, we need to slow down the RSI a little bit because we're going to get into too many trades too fast. We're going to get squeezed. But I won't know that until I've been squeezed. Then I will change. Yeah. So, backtesting is great. Robustness testing is great, but you've got to take it with a pinch of salt because the thing is going to change. So the only thing you can do is trade, and that's the hard bit. And that's why I use the market reversal alerts EA to get me into my trades. I don't want to think about it. I just want to be in the market and I'll deal with it after. Yeah. So I will deal with the market after I'm in it. Let me get into the market and then I will deal with the trade. That's what I use EAs for. I get a strategy, I prove the strategy, I robustness test the strategy, and then I just get the EA to get me into it so that I can just manage my positions. Focus on the positions that I'm in. I don't want to do the analysis. Yeah. And this is what most traders want. They want the perfect system. It doesn't exist. But systems with high strike rate and high probability do exist, yeah? Which is what I use. High probability strategies, high edges. But the edges don't always play out. But I want something that just trades for me. And then I can go, right, yep, like it. I'll stay in it. No, don't like that. Might adjust that. Which strategy would I recommend to grow a small account? Any? I mean, what is your small account, and what do you mean by grow? What are your expectations of growing an account? It's a bit of an open question. Any strategy can grow a small account. But what do you want to get it to? This is the thing. When people start trading, you've got to one of the most important things which is missed, and I don't think I even cover this in the bootcamp, but you've got to decide what sort of trader you want to be and what you want to make and why you're doing this. Yeah. If you're doing this to make a living out of it, don't expect to do that in the first 2 years, 3 years. You'll find it very, very, very difficult. If you're doing this to make a side income, you want to be trading H1, H4 strategies because you can only look at the charts once or twice a day because you've got a job. You can't concentrate or focus on it. So something like the market reversal alerts EA running H4M15 or H1M5 is perfect because you only need to check it when you get home and check it in the morning before you leave to work. If you are looking to grow a $500 account or a $1,000 account, and you're looking to compound that and grow it up to 10K so you can start trading, or 30K or 50K so you can start trading as a professional trader, That's really hard. You've got to go in with something like 10% risk per entry. And you will blow multiple accounts before you double or treble one, which is why compounding doesn't work long term. People sell compounding courses. Yeah. The people that sell compounding courses never trade compounding. Why? Because it doesn't work. You know, there's a few compounding courses I know out there. The guys that put those courses out there and charge $1,000 for them, they don't trade compounding because it's impossible to do. You got as much chance of compounding as going into a casino. Go into a casino, play blackjack with $1,000, yeah, and every time you win, double your risk. You could compound that very, very quickly, or you can have an unlucky streak and lose your $1,000. So, you know, you've got to have money. If you're starting this as a job, if you want to become a professional trader, you need a bankroll. Same as if you want to become a professional gambler, you need a bankroll. Yeah, if you want to start a business, if you want to start a shop on the high street as a coffee shop, you need capital to get the shop fit out, to buy the equipment, to buy the stock, to buy the table, to buy the chairs. If you want to set yourself up as a financial advisor, you're going to need to go and get financial advice exams. You're going to need to buy an office. You're going to need to buy desks. You're going to need to employ people. Yeah, every business has got a startup cost. If you come into trading with $500 and expect to make a living out of it, you're living in cloud cuckoo land. Show me any business you can start with $500 and make 6 figures a year. It doesn't exist. Yeah. Minimum bankroll you're going to need is 20 to 30K. Or you're going to need to be able to leverage prop. Yeah, so you need to go to prop firms. But if you're going to go to prop firms, you're going to need a very tight strategy with a very, very high strike rate. Or you're going to have a very, very lucky streak on a regular basis. And even if you want to trade prop, trading prop and making proper money with prop, you're going to need to take 100K evaluations. Yeah, you're going to need to take 5 or 10 of them. They're going to cost you $500 each. So your bankroll to get a 100K prop account is going to be 5K. Yeah, this is not a job you can do with $500. If you want to grow this gradually, I can make you 10% to 15% a month, no problem. Yeah, but you can't live on that. Can't live on you can't live on $50 a month, can you? Someone comes to me and says, I've got $500. I get asked it all the time. What's the minimum balance for your EA? What a ridiculous question. What's the minimum balance for my EA? What have you got in your account? $1,000. That's your minimum balance then, isn't it? That's all you got. The EA is going to trade a percentage of that every time it trades. Whether you've got 500, 1,000 or 50,000 or 5 million is irrelevant. It's going to trade a percentage of that account and it's going to grow it by a percentage. What the account balance to start with has got nothing to do with anything but the money you're going to make. Because if you've got a $500, I'm going to make you $50 a month. You put another naught on the end, I'm going to put another naught on the end, 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 put another naught on the end. Now we're making some serious money. But look at what you've got to have. 500K. If you've got 500K, I can make 50 grand a month. But I wouldn't, because it's too risky. I would look to make 5% a month. I would drop the risk and make 25 grand a month. You can't live on 25 grand a month, £250,000 a year. You know, I could still buy a Lamborghini with that. A Lamborghini payment on a Lamborghini is going to cost me what? 2.5, 3 grand a month? I'm making 25. I can buy a Lambo. No problem. That's what attracts people, but they want to do it at $500. Not going to happen. Not going to happen. Which strategy? That's the dream that attracts people. Then reality hits you and they quit. Yeah, exactly. Exactly. But this is the thing. The people that make the money in this industry are the people that sell the courses. Yeah. It's true. Many people earning 6 figures are selling courses. Just going to lock some profit in on this DAX. Use that one. I'm just locking in $500. We're just approaching, well, we hit ADR basically. So we've hit our average daily range. So I'm kind of expecting a pullback on it. And again, this is an exact example of me. Yeah, I'm intervening with my EA here. I'm, as the trader, the experienced person that's been doing this for ages, watching these charts going up and down, I can see that we're getting exhausted up here. We've hit our average daily range. The EA, I could say, when you hit your average daily range, pull your stop up. Oh, yeah, I could program the EA to do that. But, you know, as a trader, you look at it and you go, well, it's getting a bit tired, isn't it? Because we put all of our volume in the first 5 minutes today, which was beautiful and made a lovely amount of money. But that's the bit that's getting a little bit stuck now. So I'm going to protect it. So what the EA would now do in this case is it would pull back to here potentially, and it would get me out for about $200 profit. So I've just changed that, the system parameters. I'm doing my own live system parameter permutation check here, aren't I? I'm changing this to go, well, don't be stupid, lock in at least $500 because the EA hasn't seen that. Yes, I could program the EA to say, when you see that, make sure that you have a tighter trailer. But then then what do I set this to? What candle size do I set it to? And then the next day, when we get a big candle like that and a big candle like that and then a big candle like that, I would look at it and go, Jesus, this thing's going to pop today. I could teach the EA that as well. But then every combination of what happens in price action, I'd have an EA with 20,000 combinations of code. You can't do it. You need to be a human being and interact with your EAs. That's how you use EAs to make money. Don't be stupid. There's $1,000 sitting on the table. Take it. That's half my mortgage. Don't be ridiculous. I'm not going to let that drop back down to break even, especially after having a 4K run on the opening range pre-market. Yeah. You know, ChatGPT might change the world, but right now you need to be involved in it. You've got to do this yourself. You need a good starting capital and good strategy to grow your account. Yeah, exactly. My book coming out in spring, Lazy Way to Forex Riches. So ignorant that it would sell. Yeah, it would. One of the best books out there. One of the best books out there has got the most deceiving title in the world. This one. Yeah. What an amazing book. Sold thousands, tens of thousands of copies. Long-term secrets to short-term trading. Everyone's like, he's cracked it. What the actual long-term secret to short-term trading is don't do it. Trade the daily charts. That's what Larry does. That's how he makes his money. So his long-term secret to short-term trading is don't do short-term trading and concentrate on higher time frames. But did that book sell? Bloody hell, yeah. And it's a brilliant book. And the strategies still work today. So yeah, Lazy Way to Forex Riches. Great title. I bet there's a book. There's got to be one out there, isn't there, already with that title? Let's have a look. Lazy Way to Forex Riches. The Lazy Trader Guide to Forex Riches. There we go. Street Directory. The Lazy Man's Guide to Forex Trading. It's not a book, but it's a thread. Have you ever dreamed of a job where you can work whenever you want to without any need for a boss to keep your neck strain? And you can take vacation whenever you want to, wherever you want to. This is written by a bot or an Indonesian with very little in English language. Become a Forex trader may become an answer to your dream. Look, it is not exaggeration. There are people who really live that kind of lifestyle. Some of them making billions of dollars. Yeah, Warren Buffett, I can count them out and people making billions of dollars on one hand. He's not a trader, he's an investor. Trading from the comfort of their bedroom. No, there isn't. Using nothing but their pajamas. Can you believe that? No. What a load of bollocks. Sorry. What is this? What is this website? Streetdirectory.com. It looks like it was built in the 80s. But yeah, anyway, there you go. Prove a point. Which one is the top performer among all your EAs and strategies? They're totally different, Big Papa. Opening range breakout is the most profitable because it's taking massive risk. H1M. Do you know what? I've changed. I haven't actually said this yet, but I've changed from H4M15 to H4M5 because I did some testing over Christmas and I found there's absolutely no difference really in the entries. It's pips. But H4M5 actually gets you in closer to half an ADR than H4M15 does, and it gets more entries. But yeah, H4M15 or the mean reversion, multi-time frame mean reversion is my bread and butter. That's my top performing strategy if you want to make money long term. If you want to make fast money, opening range breakout. This one. Yeah. Oh, wrong button. Didn't mean to do that. Damn, hang on. Let me just get back to the dashboard. Yeah, I mean, that today has just made $4,000, but it's still, you know, look at this. See this, yeah, right, okay. This was a cock up. This was me. This was me actually on Friday. The max loss on this is 2.5K. 2.5K. I cocked around with it on Friday and I let it go to 4.5. That's the maximum daily drawdown without blowing the account. I'm only allowed 5%. Not doing that because all the back testing I did was based on 2.5K. So I wanted to test it on 4.5K, and I did a back test on 4.5K, and it seemed pretty good. So I changed it on Friday, and I lost 4.5K. Not doing that again. But yeah, it's made 3.8 today. So it's that account is still in loss. But look at this. Look. 2.6, 1.2, 1.9. That would have been minus 2.5. That is plus 3.8. Yeah. So if you make that a minus 2.5, which is what it should have been, that is now a 1.5. Yeah. That's $1,500 in this account is not actually that old. It's 7 days old, 8 days old. Yeah. That's my mortgage paid. Done. Yeah. You know, this one is sitting in $619. That one's sitting in $1,800. Yeah. I've got other accounts which are sitting in similar. Yeah. So this is the opening range breakout EA. This is making lovely money. This sitting, you've got 400 and I'm just about to bank 0.5% on that one today. What's this one done? That's sitting in $1,000. Oh, that's the account we're watching now, which I'm trading here. This one. Yeah, so ORB will make you good money really fast, but it's a high-risk strategy. Yeah, whereas the mean reversion position trading strategy is a lower risk, longer-term strategy that will return you 10% a month. So if you've got 100K to spend right now in your account, use the opening range breakout. If you've got 5K, you can use the opening range breakout or position trade. If you position trade with 100K, you'll make lovely money as well. But it doesn't matter which you use, does it? They both work, both strategies work, which is why I use them. But they are very different strategies. One is M5, trading twice a day, going for that super fast kill. 3% today, 2% today, 1% today. Position trading is over a period of 2 to 3 days, I'm looking to bank 0.5% on one instrument. Totally different, but both, there's no top performer. The top performer will be the one that works the best this year. Last year it was H1M5. Year before it was H4M15. I've no idea what it will be this year. I couldn't tell you which of the instruments is going to be my best this year either. I can tell you gold is going to be my worst because I know that because it always is. But so yeah, there is no better one. They're all good. Nowadays, the Forex trading marketing niche is either ICT, prop firm, or AI. They're all bollocks. Sorry, but they are. The marketing niche. Yeah. Well, I mean, ICT is his own person, isn't it? He markets himself, whatever he does. I don't know. He still sells courses, doesn't he? He makes money selling his. I presume he does. I don't know. I don't pay any attention. I don't pay any attention to it. Prop firms are. I would say prop firms are not a trend, as in, binary options were a trend, weren't they? They were like, oh, everyone's trading binary options, and then everyone realized it was all a con, and then they stopped. But prop firms, people call them a con because they don't know how to work them. Yeah, when you know how to work a prop firm, you can make very good money out of them, and I am. AI is just a way of programming. Yeah. If someone creates an algorithm that can trade the market itself, an AI, then we've got a problem, haven't we? Because you can't beat it. So I'd be worried about that chat GPT thing. It's great for coding. I can build EAs with it, no problem. But can if you ask it to trade for you, it can't. It doesn't know how to. It gives you loads of advice, but it doesn't know how to trade. So I don't know about AI. Maybe one day. But if that is going to happen, it's not going to be us. It's going to be the banks. Yeah, it's going to be the quants. The quant traders are the ones that are going to make the money out of those. I'm just going to put trail my stop up underneath propulsion. If we break that propulsion gap, I want to be out. I might as well grab another $200, $178 out of that. Can the market reversal alerts EA be set to only trade retests? Yeah. Read the manual. It's all in the manual. Reversal retest. That will only trade retests. Would you use ORB for prop challenge? Yeah, I have. Yep. It's trading prop now. It's blown as well. It's blown accounts. It's past accounts. It's blown accounts. But this is what I say. There is no EA and no strategy out there that is going to get you past it every time. You're going to blow it sometimes. Yeah. The opening range breakout strategy, depending on which look, I've got 3 versions, right? This proves the point perfectly, right? This is the DAX. Oh yeah. So there's the DAX. This is the DAX, right? So this set file, remember when I went back to here, yeah? This set file, yeah. All these tests I've done. You can't see in tabs, can you? There we go. So all these tests I've done on the DAX, all of these, every single one of these, they're all totally different strategies with the DAX. They are different system parameter permutation tests of the same EA. Yeah, this one has run 6,000 system parameter permutation tests across 6 different inputs in the EA. And out of those 6,000 tests, 4,300 came out as not losing money. Yeah. So I'm running multiple variations of the EA. I'm running a pre-market set file, I'm running a 5, 10, 15 set file, and I'm running a 15-minute opening range breakout set file. Yeah. This one has made 1,100 in the last couple of weeks. This one has made 1,800 in the last couple of weeks. This one, because I'm an idiot, lost a load of money on Friday, but it's got it back today. So I'm sitting at minus 600. So between these 3, I paid the mortgage this month. We're only 2 weeks in. To these particular accounts. These are new props running on the ORB EA, yeah? So, yeah, you can use it, but it's blown accounts as well. Because the market conditions when I started evaluation were wrong. Yeah? If And I've explained this, I don't know if you're in here, Mr. Brightside, when I've explained this before, but I've explained it many times. Whether you pass or fail a prop firm has absolutely nothing to do with you and your strategy. Nothing. What it has to do with and what decides whether or not you get that funding or you don't get that funding is the market. Yeah. And I'll explain the situation and I'll show you why it doesn't happen. Yeah. Look at these 1, 2, 3, 4, 5 days here. Depending on the strategy you're running, you will either make a fortune or lose the maximum loss with the opening range breakout EA. Yeah. So let's say here, for example, this is the open. If you use the pre-market EA here, you would have probably gone long, short, long, short, long, short, max loss. Lost. So you lost 2.5 today. Here you would have gone long, stop loss, short, win. Actually, it did. You can see the trade there. Look. There's the trade. So you made a win there. Come up to here. I don't know where the open is, but there's the pre-market open. Absolute flyer, win. Came back. If you'd had retests turned on, double win. Probably would have made about 4 to 5% that day. Dependent on one thing. Did you have take retests on or take additionals on or not? If you didn't, you only made 1. If you did, you made 2. Yeah, and that's the difference, you see. One setting in the EA, both profitable, means the difference between a 2 or a 4% return on one day. This day, there's your pre-market. Loss, 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 loss. Damn, lost 2.5 grand. 15-minute set file. Absolute fortune. Made 4%. Yeah. That one made a 2.5K loss, the pre-market. Yeah. Now, if on these 5 days, what happened was the pre-market break went boom, boom, boom. The pre-market break went boom, boom, boom. The pre-market break went boom, boom, boom. You've passed. If you started your evaluation this day, the pre-market break hit target in 1 day. If you started the pre-market break today, it made, as you saw, 3.8% for me this morning. If you'd have started it on that day, you'd have failed. Yeah, it's not down to you whether this strategy, the opening range breakout strategy, long-term has an edge. It makes money. It doesn't make money every day. Some days it makes a loss. If you get 3 loss days on a trot, you could blow your account. If you get 3 win days on the trot, you could pass on the trot. You pass an evaluation. Yeah. So you see what I mean? Whether this thing here, this thing moving, is the thing that makes you pass or fail, not your strategy. You have the best strategy in the world with a 50% strike rate, okay, and it takes 10 trades for you on an evaluation. What's going to happen? You reckon you're going to get 5 winners and 5 losers? Unlikely. What's probably going to happen is you're going to get 2 winners and 8 losers that week. Fail. You start it the next week. What happens is you get 8 winners and 2 losers. You pass. Still got a 50% strike rate. That week, it lost 8. That week, it won 8. Your strike rate's 50%. That week, you failed. That week, you passed. Still a good strategy. Still got a long-term edge. But the reason you pass or fail prop is nothing to do with the strategy. It's the day you start. So every strategy that I have works. Some weeks, I have very little drawdown on position trading. Some weeks, I'll have 8%, 10% drawdown. Some months, I'll go into 15% drawdown. Other months, I'll go into 3% drawdown and bank 25%. I don't decide whether or not that H4 RSI extension works or not. The market does. But I am in control of managing that position when the entry is taken. That's what the opening range breakout EA does for me. It gets me in when I know the edge is there. The edge is there. The edge is there. The edge is there. That's when I get in. If it goes like that, I manage it. But I need the EA to get me in so I don't miss these beautiful opportunities every day. That's what I use EAs for. And that's what I do in here every day. This is why all I'm doing when I'm in here every day doing analysis on here, I'm saying, here's a good opportunity to get into Aussie CAD with a long. Yeah. Why? Because it's extended on the 4 hour and the hourly. Yeah, so it's a good opportunity to get in long. So drop down to M15, take the reversal alert, long. The EA has done that exact thing for me today. I am in this long now. I can tell you already. I'm in this. Because the EA's got me into it. Because I like it. Because it's extended. And it's got a very good chance of working. However, if it doesn't work, the EA is going to scale me in, as I've asked it to, half an ADR apart. So it's got me in here. It will get me in somewhere around here, and it will get me in somewhere around here as price pushes down. And then it will get me out with $500 in profit somewhere up here or whatever. You know, I'll get out when I get out. It's done to me. But whether or not that goes up or down next has nothing to do with my strategy at all. Whether it's done it 1,000 times in the past has nothing to do whether or not it's going to do it now. If 80% of the time the RSI 4-hour extension at 20 bounces, that means 2 out of 10 times it's not going to bounce. If I take a proper valuation and base my entire life on that, and the 2 times out of 10 it bounces, it doesn't bounce, or when I've risked 5% on a trade because I want to pass straight away, I'm going to fail the evaluation. See, it's nothing to do with you, me, strategy, EAs, anything. The market decides what you make. Your job is to literally manage those positions, which is what position trading is all about. Yeah, if you get in with a stop loss on every trade, I can guarantee you're going to get stopped out the vast majority of the time because you put an order in there that says, get me out the market. It will. Of course it will. It knows where it is. It's going to go and get it. Way before it goes up and gets your TP. If you don't use a stop loss, you won't get taken out. But you still have a massive high probability of that working. Look here. Got extended there. If you got in there, this is a beautiful example. This explains position trading perfectly. Look. RSI on the 4-hour got extended at that point there, that candle. Yeah. There. Whoop, moved it. There. Okay. So that's where you got in. The extension you would have taken was, the reversal of that rather, that you would have taken was there. Okay, so that's your reversal alert, right? So you would have got in there. Anybody that puts a stop in the market is dead. Not you, because you're a position trader. You got in there. So we move along, pushes down. You get another reversal alert there. You take a second entry there. Price pushes up. Your first entry was here. Your second entry was here. Price pushes up. Get out there. Take that profit. Take that break even. Happy days. Why would you use a stop loss? Why would you tell the market when you get down to there, make me a loss of X, Y, or Z? It's ridiculous. But the reason you took the trade was because of that H4 RSI extension. Yeah. It wasn't the right time to get in. It was the wrong time to get in. The right time to get in was here, not here or anywhere in that zone, was it? It was there. That was your exact spot to get in. But you can never time the market because the market will do what the hell the market wants to do. Because it's extended down here does not mean it's going up there. This thing could drop very easily and it could come all the way down here. Has done in the past. We've got down to 9s, 10s. I think last year we saw a 5, didn't we? First time I've seen a 5, but we saw a 5 on the 4-hour. It's the first time I've seen it, ever. But we saw one. Did we think that was coming? God, no. When we got down to 10, we were like, this is the buy of the century. Did it carry on going? Yes. The market goes where the market wants to go. You have no control and you can do nothing about it. Your job is to get on board and manage your trade. That's the only job you have. Manage your risk, manage your trade. Get out when you think you can. And if you get back to break even and you think, I really don't like this, get out at break even. Just get out. But don't use a stop loss because otherwise you'll get stopped out. Because every time you put a stop loss in the market, it comes and takes it. Every time you put a stop loss, it comes and takes it. That's the market's job. That's why retail sentiment works so well. Yeah. If the world and his wife is going in one direction, i.e. they're buying, like they are with this lot, where's their stop? There. What does the market do? Takes liquidity. Where's the liquidity? There. If you put that order in the market to say, get me out with a loss of $200, what's it going to do? Get you out with a loss of $200. What a stupid order to place in the market. But depending on when you get into that proper valuation will depend whether or not the market takes your stops or not, doesn't it? You don't decide. And this is why everybody's looking for the perfect strategy. Oh, that doesn't work. RSI extensions don't work because I keep getting stopped out on them. Well, take away the stop. Does it work now? Oh. Moving average crossovers don't work because you use a stop. So if you take a moving average crossover long there with a stop loss, you got stopped out. Remove the stop loss, the moving average works. Moving average bounces. Nothing wrong with that as a strategy. Yeah, that one would have worked actually, look. So if you took the bounce there, actually no, there's a bullish candle. It wouldn't have worked. Look. See, you'd have got stopped out on it. Moving average bounce, yeah. So that green candle, we pushed down really hard into the moving average. We got a green inside bar. I personally would have put a pending order above the inside bar, but if you took that green candle, you got stopped out. If you wait for it to close back above and enter there with a stop, do you think you would have made money sitting in this for 21st of December to the 28th of December? Yeah, with a stop loss there, because that's the low. If you wanted a 1-to-1 R, you got to wait, what, 3 weeks to get that money? Ridiculous. That's why people don't make money. Trying to go for a 1R return with a stop loss because they've been stopped out twice. They can't now go for 1R return. They've got to go for a 3R return because otherwise they don't get their money back. So the more stop losses you have trigger, the further away your TP gets on the next trade, or the bigger the lot size gets on the next trade, and the more money you lose. Either way, using a stop loss just makes losses. Fact. Franco, I've just seen your post. Better living through Forex trading. Easy winning strategy for daily profits. That's a good one. I'm going to write a book. I'm just going to call it Don't Be an Idiot. Stop using a stop. I won't sell any copies of it, but the 5 people that buy it, they'll be like, wow. 90% plus win rate, Indices, FX strategy, passing prop firm guarantee. This title will make your sales fly, yeah. I saw it the other day. I was on Facebook the other day and an advert came up. It was an EA basically with an 80, as soon as you see that 85% strike rate, I immediately clicked on the link because I wanted to see which bullshit it was this time. That was literally the reason I clicked on it. Just so that I could hopefully go and spam their chat or something and blow them up or go to the Telegram group and abuse them and get kicked out because I love doing that. Because these con artists need a bit of hassle because it's the more time they're fighting me, the more time they're not screwing other people over. But there's no 85% strike rate. Only if you don't use a stop, which is fine. I've got a 65% strike rate on my position trades. Why? Because half of them lose. Because when where's a position I took? Let's try and find one I took last week. It's on the chart. We've looked at something. I've got a position on, haven't we? Can't remember where it was now. See, I can't even remember the trades that I took because, there you go, there's one. Because I don't take them, the EA does. And if the EA is doing its job, I don't have to look at it, do I? There you go. So there's 3 trades I took here over the last week. That one and that one and that one. So that's a loser. That's a winner. 50% strike rate on that trade. Yeah, this one, sell. sell, sell. That one's got a 66% strike rate because I had 2 trades that won, 1 trade that lost. My strike rate overall is 65% because it's rare. I'm in single. There's one there. Look, there's a sell, an exit. Those are rare. Vast majority of my trades are taking 2 to 3 positions. My position is taking 2 to 3 trades. So I'm always sitting around that. You show someone a 65% strike rate, they'll snap your arm off. As soon as you tell them there's no stop loss involved, they'll run a mile. That's the thing that makes you the money. But you can't achieve that using a stop loss. It's very, 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 very hard unless you're using a 1R or maybe a 1.25 or a 1.5R strategy. Yeah. If you're using those, you've got a chance of getting a 50 to 60% strike rate. Mean reversion. Bollinger Bands. There's really good Bollinger Band strategies out there with 1.2R, 1.5R returns. But no one wants to trade those because everyone wants a minimum of a 2 to 1. Why? Because you taught that. It's a load of bollocks. It doesn't work. Yes, I can catch the occasional one. Look at them this morning. What was my R on that this morning? My stop loss on that was 15. That was 93. That got up to. It's a 6.2R return in 5 minutes. Not bad, eh? Does that happen every day? God, no. I wish it did. Anyway, I'm waffling. Right, so I'm still in DAX long. We're over ADR now. So depending on your broker, obviously, if you're looking at my Forex funds or a different feed, you'll have potentially a different ADR. But pretty much all of them are going to be over ADRs. So Seymour, I'm nearly at your heady heights. My strike rate is 62%. Yes, perfect, Seymour. That is an awesome strike rate, and any trader in their right mind will snap off your arm. If you go to Barclays and say, they turn around and say, what's your strike rate in your portfolio? And you go 62%, they go, yep, you're in. Seriously. If you go into Barclays with a positive R and a 40% strike rate, they'll snap your arm off. Don't forget, what you're trying to do is get a positive return out of a random thing. It's the same as trying to get a coin flip right with a positive R. This is just as good and just as difficult. And the only way you can get it is if you cheat. Yeah? Or don't use a do whatever. 96% of people or 95% of people fail. Why? Because they use a stop loss. Do the different thing, do the opposite thing, and all of a sudden you become profitable. It's really easy when you think about it. When you've done it, I think that's more likely when it's easy. It's not, when you do it, it's easy, isn't it? As we know. Anywho, right, I'll leave it there. I'll be back this afternoon at 2:20 for the New York session. Wouldn't it be lovely if we get the same thing on the New York session? We get a beautiful ORB, but in the opposite direction, if they slam it back down again later. But I've got profits locked in. I've got 330 extra locked in on that now. It's trailing on a 30 pip stop. So, yeah, it would be lovely if we get the ORBs to the downside this afternoon and come back down. So if you look at the NASDAQ, not quite as clean, is it? We're sitting inside a propulsion gap already on that. And the Dow's nice. Look, so we've got this propulsion gap to test on the Dow. We've got one there as well, actually. Dubious as to whether that's decent. But yeah, potentially we've got ORB on the opposite side to come and sort this gap out later. So that would be lovely, wouldn't it, if we get the opposite happening in the US markets this afternoon. Let's see. That'll be good. That'll be me done for the month. It is the end of the month, so there you go. Right, so I'll be back this afternoon, same time. If you need me, I'll be in the Telegram group. I'm working on the sentiment EA at the moment. Just doing more analysis on this. Oh, look, it's made a loss today. See if we can get that back. Oh, look, it's about to bank. It's about to bank $800, $1,000 on the euro pairs. So that'll be gone when that banks. But yeah, I'm working on this at the moment. I'm still letting this run. I've got to do basically analysis on every trade it takes just to make sure that the functionality is working, that it's getting in correctly with everything. I've got to go through every chart. Look at that for a sentiment trade. 28% of the market when that trade was taken was short. They were all long. So yeah, I've got to basically make sure that every trigger's working and every scaling's working at the right levels. So I've got to give this at least a week's live testing so that I can actually see the trades that it's taken and make sure they're all being taken correctly, which unfortunately you can't do in a backtester because, and also the scaling outlook. There you go. So this is drawdown control. So I've got to make sure it's all doing everything it needs to do. But it's got to be done live because you can't backtest sentiment. Stopping your profits. Revolutionary trading methods. Good one. That's a good one, Franco. Stopping your profits. I've got a really good advert I ran on Facebook, actually, called Stop Hunting. But it's a kind of play on words, if you think about it. Everybody in the world is going mad for ICT. And BTMM, like Steve Marrow's stuff. That's probably the top talked about, I think, courses out there. And they both use stop hunting techniques, don't they? So I put an advert up that said stop hunting. But what I actually meant was stop hunting for the perfect strategy. But everybody reads it as stop hunting and they think it's something to do with smart money concepts. So it's a bit of a play on words. But it works. It's the most clicked advert I had when I was doing it. I don't do much adverts anymore. I used to promote the EAs massively, but it's Facebook's too expensive. It's not worth it. Anyway, I'll go. I'll leave it now. Stop waffling. Be back this afternoon, 2:20 for the New York session. We'll see how we get on there. Anything you need will be in Telegram. Otherwise, I will see you hopefully at 2:20. If not, tomorrow morning, 7:50, same time, for the Frankfurt session. Have a good one, and I will see you later.